Good morning, traders. Welcome to another episode of the Flow Show. The UK starts a very long weekend thanks to our Queen's Jubilee celebration. So even if the UK is closed, we are still here. And we are going to talk about the markets, a bit of news. Today, there's not that much news, but still we can look at a few things going on. And to kick us off with, the word of the day is forceful. We've heard from Bank of Canada, which raised their interest rates 50 BP yesterday, that they might be even more forceful if needed. And then a few hours later, we heard from the Bank of Mexico, saying that they are ready to act more forcefully than they already do. Then they are on a 50 BPs hike cycle. So the rumors are that they could even think about doing 75 BPs if needed to bring inflation down. Dollar Mex reacted a bit to it. We tried to break above that 1970-73 resistance yesterday as the dollar grinded higher. But we failed there again, and we are trading back below around 1962 right now. The dollar Canada, in turn, it was so expected from the Bank of Canada that the Canadian versus dollar actually did not react too much, even went a little higher. But the Canadian dollar is behaving quite strongly versus the rest, such as Euro CAD, CAD yen, the yen especially is still pretty heavy. What else was there in the news? This morning, OPEC Plus came out saying that a compensation for the Russian diminishing oil output could be approved gradually, but no guarantees are given to be approved today. And the Saudis were already saying that they are ready to increase their production and output if needed. Of course, they're giving as a reason that they are afraid that the prices will become uncontrollable. That's how they put it, but I reckon that oil over 110 bucks, it's not really uncontrollable, but rather a case of taking advantage of those high prices. The BOJ Adachi came out saying that it's too early to tighten. Although companies are showing that they are moving away from their deflation-based models, and it seems that Japanese accounts are now saying that we are finally out of deflation and seeing some inflation. The dollar yen is hesitant around 130. We'll come back on that a little later. A lot of it depends on interest rates, really. The last thing that was really in the news, apart from the Fed central bankers who are Daly and Bullard still willing to step on the hike accelerator, which also supported the dollar yesterday. The other thing was the beige book coming out last night, which is showing some slowing. Participants or respondents to the surveys were citing still labor market difficulties and supply chain issues. I think that's not not really a big surprise from that side. We know that what is going on for months already. So the beige book came out relatively okay, but some slowing might be seen. So that's mainly for the non-data news. Yeah. So let's move over to some data that came out overnight, which was very light. I'm going to share my other screen. There we go. So on the data front, this Japanese buying less foreign bonds, we have to know that those data are not from this week. They are from last week, and the survey was taken before the 2 or 3 yen ramp higher in the dollar yen. These numbers must have contributed to actually the other side of the dollar yen the week prior. For the rest, the Aussie trade balance coming out a bit better. Aussie is still behaving pretty well. Aussie is globally holding up really well. Oh yeah, this morning we had the Swiss CPI ramping higher. We saw quite a steep drop in Euro Swiss. Euro Swiss lost about 40 points, 40 pips on the news, but it's now gradually stabilizing back to where we were before. We have to say that Euro Swiss is still in the 102s. The expectations for the S&P starting to hike are gradually moving higher. So we have to be a bit careful what's going to happen to the Swiss franc when the S&P de facto starts to hike. It is possible that parity in Euro Swiss comes under pressure once they really start. It will depend on what how much they hike compared to the ECB really. And then lastly, we had this morning the Eurozone PPI coming out. Looking at those percentages, they are nearly emerging market percentages. So the ECB will have had a look at those as well. Staying so high, we can expect that they will have to do something soon. Of course, the Eurozone is undergoing the stress from the Ukraine-Russia situation, and so those PPI, CPI data, they will have a tough time to go much lower. Now, I think I've done the rounds for what news is concerned. So let's go straight over to have a look at our markets, what they are doing. So I'm going to change screen. Give me a sec. Here we go. The first one I wanted to highlight really is gold yesterday. As we see here from what happened yesterday, we came really bang on this support line and bounced from there. So this was really the last support to hold, and it held really strongly. And now we are already back above this trend line, which was broken. It's getting a little bit crossed often, so soon it's probably going to be a little bit weakened, this one. But still, gold saw a really good bounce, despite the dollar picking up against all the rest. Gold really held well on that support, which is telling and also giving us like a real good zone here now to rely upon. The hold could mean that we are being for a test of this 1875.80 still. As long as we are there, as long as this kept, then we could form a range. But if this would go at 1900, will look us straight into the eyes. Moving on to silver. Silver is hanging around this 22 again. I don't really know what to do with it here. I'd like to buy dips, but we need to see the economic data. I do think that sooner or later this is going to base and we're going to go back higher, but we really have to be careful with the data. On moving over to the euro dollar. Remember what I showed you yesterday about the about the euro dollar and the German US yield differentials. Well, if we look at both of them, they are, again, if you look at those differentials, we bottomed yesterday, we had a spike lower, and now they are crawling back up. Oh, look at the euro dollar, it's nearly a perfect overlay. I think we're in a range. The dollar pairs, since US yields are going higher, but at the same time, European yields, sterling yields are going higher. Feels to me like the dollar pairs are a little bit rangy for now. 106.40, 107.10.15, and then the 107.40 in between. But I would rather say the 65.80, 107.65.80. Then up towards 108, the figure, which is going to be a big resistance. I would rather trade this in a range for the time being until we see clearer on the data front. This afternoon, we will have the continuing jobless claims in the States. We will have the non-farm productivity. We will have the durable goods, and we will have the delayed ADP change in the US as well. So we could have a bit of a sporty afternoon again in the US. The ADPs were delayed because on Monday we had this US holiday, so they are coming out today. That for the euro dollar. Then the cable. Excuse me, just a sec. I needed a drink there. On the cable, we're also trading a range, but I think it was pretty clear that this 126.50.80 was a big resistance area, which we showed earlier, which Greg also showed earlier. And right now, in the very short term, it appears to me that we should be finding a little bit of resistance between this 125.45.47 and 125, call it 70, where we are now. I think here, the intraday, this is going to be a bit of a resistance area breakthrough. Then we could see it back relatively quickly to 126.30 and perhaps 126.50.80, depending on the data. I am trading this from the short side. I'm still not a fan of the sterling. I still think the data are pointing to a slowdown, and there's a lot of weight around the sterling's shoulders right now. I'm trying to trade this from the short end, but also considering that we are having supports on the downside. So I'm trading it really in a range from the short end right now. Who is Mike? Are you still core short euro dollar? I've been trading the euro dollar from the short end a couple of times, but right now I don't really have a position in euro dollar, Mike. I'm trying really to trade the range, and from it will be from the short end still, but don't forget not to forget to take profits when it comes over. Moving on to the euro sterling, I thought yesterday that we were going finally to break this box. I'm a little bit long in that. It's holding supports, but we broke out and then came back in. It's a slow one. It's a real slow one. We really need to start to get moving either below 84 here, either below 84.80, or break above 85.5, 85.50.60 to really start a real move, in my opinion. Then moving over to the dollar yen, we had that look above 130 up to that little resistance, 130.30, and shied away from that. I've got the impression that above 130, towards that 130 figure 30, we might find a few Japanese corporates sitting on the offer, perhaps because it's been a while since we visited this level. So I'm sorry, I'm a little bit cautious with this one right now. But looking at those yields, and as long as those BOJ members are telling us that that they are not going to start really de facto tightening.
Player refresh.
This thing will have difficulties to really hold low. That's what I mean. Unless risk starts really to falter on negative economic data. Then euro yen, we're still moving higher, broke out of this triangle, we're moving higher, but we're finding a little bit of a top here around the 139. I'm a bit in between two chairs here. I don't have a position in this one right now because I'm not sure whether ECB is really going to be as forceful as the other central banks. So this one I'm leaving alone. I'm rather having my sights on another one, in which I like to buy dips. You know, I said this yesterday. I think we broken through this bullish flag or pennant pattern, and it's a strong move higher, and anywhere I might start to look to buy this one anywhere closer to 102 or a little bit below, for sure around 101. I'm trying to be patient with crosses, because we're in a period here in June where a lot can happen on the central bank side, so we have to be a little bit cautious and for sure patient. If you're an intraday trader, the 102 looks to be, if you 102, 103 now looks to be a bit of a zone which we could be trading inside. Next, the krona. We've seen the euro Norway. As I told the people in our room know, I was short this one, and then I took my profits into this zone, into this double trendline zone, and we've got a bit of a moving average here, but okay, take it for what it is. But then with this OPEC news and with the take profits going on just above 10, this one is now rebounding a little bit. I'd still be a seller on rallies in this one. But be cautious and have like really a close eye on what's happening in the oils. If OPEC would decide that it's okay to compensate for Russian oil, oils could get a little bit of a kick in the teeth. In my opinion, we might be trading a few bucks back lower. Then dollar mix. Sorry, on the dollar mix, as I was telling earlier, we've got this layer of resistance here, this trend line which we had broken, which briefly gave way yesterday when the dollar got bought, but then we stabilized in this little zone. Actually, this morning we opened around 1970. And then after Banxico saying that they might be more forceful in their hiking, in their hikes later on, we're trading back below. We have to say that overall MEX is still behaving quite strongly. If ever this 1940-42 gives way, this could really go lower, which I think, looking at the Mexican yields, it's a real high yield. In my opinion, there's quite a bit of carry going on. If you look at how the rand behaves, the MEX behaves, the high yielders are getting traction, especially versus things like yen, perhaps even Swiss, perhaps even euro. If you look at the euro MEX, euro rand, and then you look at MEX yen and ZAR yen, they're really ramping higher. I think there's quite a bit of carry going on, probably also from the Japanese side. But then, so in the short term, I would keep an eye again on this 70.73, and if we would give way, then we might be looking again at closer to 20, which in my opinion is going to be a decent sell zone. I might do it via the dollar MEX again, but I will keep a close eye on those MEX crosses as well, such as Euro MEX, MEX Yen, as I said, because they might be juicier than really versus dollar. So keep an eye on all of them. On as I was saying, the rand. Rand is still strong. We had this rejection mid-May of this strong 16.30-35 zone, and now we are back trying to test 15.5. If this goes under 15.43, call it 40, I think we may be in for a ride down to this 14.75.80 again. It is possible that we see this kind of move for as long, again, I will repeat, for as long as economic data are not falling out of bed. There's a lot hanging on to data right now, and for the dollar tomorrow as well. But we will talk about the NFP tomorrow, of course. But the NFPs are going to be monster important this time, in my opinion. What else can I show you? S&P. I know people are looking at it quite closely as well, and trading it very actively. Yesterday we had on the ISM holding up. We had a bit of a shocker. Well, not really a shocker, but the market taking bad news as good, and good news since the indices were holding up. Good news as bad for stocks, because then the Fed will hike. You get the correlation. So we had a drop back through 4,100 on the S&P, but it's holding this short-term trend line. So I guess today we'll be looking at, again, around 40.80, 40.85. Have a look at that if you would be breaking below. And the top side in the short term, I think 41.30. That's really the short end, and then 41.85, 42 is going to be the bigger resistance again, where we capped later on. Pretty neutral on this one. Looking at yields, looking at expectations. I agree with what Stel has been saying many times, Stelios, that we should still, well, we should, it's not advice, but I'm still looking to sell rallies there. 4,200 looks good. If that doesn't work, keep it close to the chest. If it for 42.20 goes, perhaps, and then try it again around 43, which 1, 2, triple top now around 43. That should be a really big zone now to watch if ever we make it back up there. Folks, any questions for me today? Something that you want me to look at? I'm just looking at the chat now. If anyone wants to ask any questions, please go ahead, because today I think we are a bit in a transition day. I'm not going to keep you for too long if nobody has anything specific to ask. Here we go. Yes, Arif, UK holiday 2 days, but you know, we're workaholics. Money never sleeps. we are here. Aussie NDX, is that Nasdaq, Ollie? Okay, Ollie. Let me put it up. It's really one I don't trade. I'm really trying to keep my stuff a little bit simple, but I know some people. Sorry, I can do a quick one. Let me get one here. For me, we're in a range. Call it 12,900 and 12,350. Have an intermediate tube station around 12,580, 12,600. Yeah, 12,580, 12,600. Where we are at right now, there's in the middle there. Looks like a bit of a pivot on the short term in the 12,600 zone. Yeah, I see your comment. It's pretty close to the S&P, but it's not completely S&P, right? I think the Nasdaq is more volatile due to those tech stocks, which makes it a little less obvious to me. We have Paulie in our room, who is an absolute stellar jobber who is really nailing all those intraday moves, and I think that is the way to trade Nasdaq right now. For as long as there's like the big influence of possible yields and economic data on the tech stocks, I find the S&P a little bit clearer to trade. To be honest with you, so that about the Nasdaq. So I think we're about mid range here right now. It goes back below 12,350. I think it's bad news for this one. Richard, Aussie Swiss. Well, look, I'm not going to pull up for this one. I'm not going to pull up a chart because I think I'm a little bit. I'm going to tell you why. I am the same way on Aussie as on Swiss. I think both could actually continue to do well. Okay, let's put it up, but I'm not really trading it right now. And look, we're really in a bit of a downward sloping. This could be actually a bull flag forming, but I'm not really tempted to go and trade it. I would say on the intraday, 68.30, 69.5. Those are sort of your boundaries I can see. But I'm reluctant to trade it because I think Swiss could strengthen a bit more over time. Euro Swiss, Dimitris, yes, I spoke about it before. I think it's a matter of time before we trade parity in Euro Swiss. SNB is on a hiking. It will be hiking soon. They told us as much. I think anywhere 103, 3.5, we are going to find resistance right now, unless the ECB goes absolutely bananas and starts to hike 50 BPs at the time. Timothy, what would change the Fed's mind to stop the hike? Economic data. If the consumer data start to really suffer, and if the demand versus supply in jobs start to balance, then I think we will see the Fed starting to slow down. What happened to the cat, Barbara? I don't think a lot happened to the cat. Honestly, the Bank of Canada hiked yesterday. The market was expecting it so much, and dollar versus cat is quite stable. Oh, Carsten, interesting one. Options. All right. Let me give you the view here on the options. I shouldn't be showing you this because this is FA subscribers territory, but since Ryan already showed and I'm going to show them, I'm going to take the liberty to show them to you again. There's a bit of activity going on between 107 and 107.5 on the options today in the euro dollar. It's big enough to attract if we are in the zone or to reject, because as we can see, there's a lot of calls going on between 107.20 and 107.5. There's a lot of calls expiring. I reckon we are going to find resistance in that zone if it's there around the time of expiries. Don't forget, these are also just a part of all the options that trade in the market. This is not a full view. This is only what we get on the media and things like that. So take it all with a pinch of salt. People who were in banks or who know about options, then they also know that you already need to have like a decent amounts before these options really go and start to magnet or reject or support. There's an interesting one today on the dollar rand. There's a couple on the top side, 56 and 60. Still not huge, just over $1 billion combined, but I think this 1560, if we get there, could act like a bit of a resistance as well. But overall, today's picture is light on the options. And looks like it's in a range. Yeah, a lot of things are in a range right now because the yields are going together. The US yields are pushing higher. It's of course the biggest market, so the dollar is in some way supported, which we can see against the ultra low yielder, which is the yen. But the rest of the dollar pair sits since sterling yields. If you look at it just from far, sterling yields higher, Canadian yields higher, New Zealand yields higher, Australian yields higher. That keeps the dollar in from that correlation side, keeps the dollar in a range. Right, everybody, that's it for me for today. I think I am through most of your questions, so I'm going to wish everybody a spectacular trading day. But keep some energy for tomorrow, guys. Tomorrow will be an absolute a big day with the US NFPs in my opinion. So have a peaceful day, and we see or talk to each other tomorrow. Thanks everybody for joining.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.